What are tax deductions? On your personal income tax return, you can deduct certain things from your income to arrive at your taxable income. It's your taxable income that gets applied to the tax brackets, the tax rates. So you want to get as many deductions as you can to get down to your taxable income. So the IRS allows you to have a standard deduction, or you can itemize your deductions. So a standard deduction in tax year 2020, the standard deduction for a single individual was $12,400. For someone filing married jointly, it was double that amount, $24,800. For 2021, tax year 2021, the amount is going up slightly. So you have the standard deduction. You want to compare that to your itemized deductions. So the components, some of the components of your itemized deductions are, let's start with taxes. So the amount that you paid the state in income taxes, that amount is deductible. So the withholdings from your W-2s, that's an itemized deductions. Also, if you paid income taxes on your prior year's tax return during that current tax year, that amount is also deductible. Sales tax, you can opt whether to deduct sales tax that you paid, and there's tables for that, or you can deduct the state income taxes. Usually the states that have income taxes, the state income taxes are higher than the sales tax tables. But there are some states that don't have income taxes, so in those states you use the sales tax tables. Also, as far as taxes, you can deduct the property tax on your real estate that you own and any personal property tax. This would be property tax on vehicles. So some states still assess a property tax on vehicles. The state that I live in Utah, they did away with that. There is no longer a property tax. Instead, the Department of Motor Vehicle has gone to a fee-based fee. So it's a fee based on the year of the vehicle, not based on the value of the vehicle. So technically, it's not a tax, and it would not be a tax deduction. In the area of taxes, the total tax amount, you're limited to a $10,000 deduction in that area. Another itemized deduction would be charitable contributions. So you have cash contributions, and these again need to be paid to a qualified charity. And you also have non-cash contributions, and the non-cash need to go to a qualified charity also. So these would be things like household items, clothing, given to Goodwill, or Deseret Industries is a charity here locally that gets used quite a bit. If the amount given is over $500, there's a separate form, or the amount claimed is over $500 for non-cash deductions. There's a separate form that needs to accompany the tax return. If the item's value is over $5,000, there needs to be an appraisal with it. For cash contributions, new in tax year 2020, they allowed you to take your standard deduction and still take a small deduction for cash contributions. For a single individual, that was a $300 deduction. For married filing jointly, it was double that, to $600. Other things on your itemized deduction list would be a mortgage interest. So a first and second mortgage on your primary residence and a secondary residence are also deductions. Also, any investment interest is a deduction. So these are just some of the few things that go into itemized deductions. Again, you want to compare the amount you spent on itemized deductions to those of the standard deduction.